The Bank of Korea will be holding its first policy rate meeting of the year in the coming hour. It looks like the 3.5% rate is set to remain unchanged for the 8th time straight. Joining us to discuss is Professor Hur Joon-young. Welcome back.
Hello.
Good morning. The country's central bank is expected to leave the policy rate unchanged in the upcoming meeting, right?
Yeah, I do agree. In the sense that their primary mandate is price stability, but the inflation in Korea, December 2023, is still 3.2%, which is way higher than the Bank of Korea target. So I mean, there's kind of very low probability of late cut, in the sense that the prices, the inflation is still high. But at the same time, the Korean economy is kind of big in the sense that recently, there's kind of project financing issue in the real estate sector. So, I mean, another rate hike will be pretty dangerous to the Korean economy, in the sense that there's kind of weak sector in the economy. So, I mean, cut, not rate hike. So maybe they maintain the rate at 3.5%.
I see. What we also do know for now is that the U.S. Fed officials they all agree that interest rate cuts are likely this year. How closely will the Bank of Korea be watching the moves by the Fed then?
I mean, it is I think at least, the probability is pretty low, in the sense that, the Bank of Korea will move before the Fed rate cut. I think that probability is pretty low because of the financial market, international financial market, because of the exchange rate kind of issue. Maybe the Bank of Korea has not much room for moving before the Fed rate cut. So I think the Bank of Korea will be patient, keep watching what Fed is doing, and then if Fed is starting, their rate cut, then the Bank of Korea will follow. That's what I believe.
Right. That means South Korea is not in a hurry to cut rates anytime soon, right?
Right. So I think the 3.5% interest rate will be we'll see that interest rate for a while. I think until the end of the second quarter. So in my scenario, I think market first. Market expect that the Fed rate cut, the first rate cut will occur in March, but I think that's too much. That's too early. I think given the U.S. labor market situation still pretty solid, and so I expect that the first rate cut from the Federal Reserve will be as early as possible this June. And then the Bank of Korea, after the Fed, lowering their interest rate, the Bank of Korea will follow. I think the earliest possible date will be, the early third quarter, July or August, I think.
Professor Hur, but some experts are saying that the rate cuts in South Korea could come as early as in the second quarter. Why do you think they believe that it could come as early as second quarter then?
If the Federal Reserve move in the first quarter, for example, as market expected, the Federal Reserve, first rate cut, if that happens in March or sometime in May, then the Bank of Korea can move in the second quarter. But I think my scenario, given the U.S. economic situation, macroeconomic situation, the Fed first rate cut will be, as early as possible in June, and then the Bank of Korea will follow. Then the Bank of Korea's first rate cut will be happening in the third quarter. So that's my scenario.
Before I let you go, Professor Hur, South Korea is going to pour all of its efforts to make sure its economy is export-driven in 2024. But there's a lingering concern over poor domestic consumption, right? Will that get in the way of a possible rate hike? What do you think?
Sure. The interest rate is pretty high in Korea. 3.5% interest rate is pretty high. At the same time, there's a kind of accumulated effect of price rise in Korea. The CPI inflation was pretty high for a while, so there's accumulated effect of it. So there's not much room for the consumers in Korea open their wallet in this days. So given this situation, another rate hike in Korea will be pretty dangerous to the Korean economy, not just the industrial sector. At the same time, it will hit the Korean consumers, situation. So I think another rate hike in Korea from the Bank of Korea will be very less likely. So,
All right, Professor Hur, thanks so much for joining us this morning. We appreciate it.
thank you.